Welcome back. Now, annual consumer price inflation ticked up slightly in December, coming in at 3%. According to Stats SA, housing and utilities, miscellaneous goods and services, and food and beverages were the top contributors to the rise. Average annual CPI for 2024 was 4.4%, which was 1.6 percentage points lower than the corresponding average of 6% in 2023. PwC Chief Economist Lullu Krugel joins us now for further analysis of the print. Thank you so much for your time, Lulu. Now, the inflation picture has actually been on a cooling down trajectory for a while. Does this inching up of prices bring any kind of concern in terms of maybe what could be the start of that trajectory going in the opposite direction? Or maybe is it just seasonal effects at this point?
Yeah, that is a good question. I think the good news is economists as a whole were actually forecasting that we would see higher inflation in December. So it's not unexpected. And the good news is the consensus forecast was around 3.2%. So the fact that we came in at 3% is actually a bit of good news. It's a little bit lower than expected. I think what we need to realize is that we will see a slight upward trend in inflation over this year and over the course of 2025. And the reason for that is probably, amongst others, if you look at the massive impact of fuel price decreases that we've seen over the last year. So that momentum is out. So we expect inflation to edge upwards as we continue through 2025, maybe towards around 4.5% or just below 4.5%. So it's definitely not, a sudden runaway that we expect or inflation exploding, to 5, 6 or whatever percent. But if you just look at the underlying trends of what happened last year and is it expected to continue this year, we should expect slightly higher inflation.
Lulu, I actually want to drill into that fuel inflation because, for a long time, it was really the biggest headache in that inflation picture. And then at some point, it really cooled down a lot where people weren't concerned. But now, just with everything going on, we have Trump 2.0. We're all saying drill, baby, drill. So what is your, picture of what that fuel inflation could look like from here on out?
Yeah, it's such an unknown at the moment, and I think that's the difficult thing. Things like inflation or growth or those broader cyclical trends. In the past, we've been able to kind of make good estimates of where that should be going, unless something really out of the ordinary happens. I think the challenge that we are sitting with at the moment, to be brutally honest, if you look at the Trump administration for what, is just the unknowns and how those things that should be policy decisions, longer term decisions, could potentially have an impact on some of those things that we were seeing moving in a trend cyclically. So, on the one hand, some of Trump's policies, like, drilling for oil, etc., might actually bring further relief in the oil price. On the other hand, if you look at some of the things like the trade tariffs that he is implementing, if there's retaliation, if you see China responding, Mexico, Canada responding, it could actually be a risk for inflation over the next couple of months, maybe say in 6 months' time. So those are some of the counterbalances that we need to look at. However, with that in mind, if we look at the picture at the moment, we do not foresee that there should be major upheavals. But as I said, everything that used to be cyclical, inflation is trending down, interest rates should go down, those kinds of things, is a little bit in the air and a bit uncertain at the moment.
All right. Just some of the things that stood out for me include inflation for restaurants and hotels in December actually cooling down. And I was wondering if this is actually a signal of less demand, which is quite interesting considering that is the festive season. Just maybe talk about that and maybe any other notable, movements that you saw in the different categories as well.
Yes, so that's an interesting one. And I suppose it actually reflects what we've been seeing from company results in that sector. Companies in the fast food and restaurant sector has been telling us We're under pressure.
Yeah.
And it is most probably as a result of consumer spending being under severe pressure for a while. So I think we're seeing some of that potentially coming through. People just don't have the cash or the extra, it's really going into covering living expenses. Although I do believe that we might see a few further interest rate cuts this year, which might create a little bit more space. And then I suppose there are certain categories like housing. There was a reasonably steep increase in housing, and it's measured through an equivalent of what you will pay for rentals. So that's the way in which it is measured at the moment. And that increased by 4.4%. Now, if you look at the overall inflation figure, I suppose it's not crazy.
Yeah.
It is some of those, as you mentioned, that are measured only from time to time, not every single month. So sometimes you might see a little bit of change or upheavals here and there.
Yeah.
But be that as it may, very comfortably below where the SARB would be looking at it. And also, I think one of the other things that's really important for the SARB and for the Monetary Policy Commission is to bring people's inflation expectations over time down. Because, I mean, let's be honest, if you talk about 3 to 6% inflation, that's the range. It's just human to say, oh, inflation is 6%, even if it's not.
Yes.
So by getting to that middle point of the target, or maybe reducing the target to 5%, we can actually manage that expectations, and in that way manage where inflation might be going forward. So definitely has some positives as well in terms of where the governor wants to go. Although there are some criticism that it's happening in an environment where the economy is very, very slow in terms of growth.
Indeed. Well, let's zoom into the SARB because we are a week away from the next monetary policy meeting from the South African Reserve Bank, of course, that taking place next week. You talk about expecting a few interest rate cuts this year. Can we expect one next week?
I think probably I want to say 100% believe
yes.
so.
Yes, yes.
But, 25 basis points.
Yeah.
Again, I suppose one can debate, shouldn't they just have gone for 50, rather than these small increments?
Yeah.
Would it have more? And overall, still the same decrease, but maybe it would just have sent a slightly different signal to the market, be that as it may. 25 basis points, but then I suspect we might see a round or two of them waiting where we are, just to see where are some of these things going? Where is the oil price going? Where's the rand going? The rand has strengthened again, which is really good news. And where are some of these other unknowns like trade and tariffs and so on? Where might that be going?
All right. Well, we will be hearing from the governor next week. Thank you so much for your time and for your insights there on that consumer inflation picture, Lulu. That was Lullu Krugel, Chief Economist at PwC.